This is the second webinar we are going to be hosting today. The last week we hosted the webinar introduction to Forex, where we discussed a little about what is Forex, how people make money, how you can look at the market from different perspectives. The aim of all these webinars is just to make sure that I deliver my personal strategy to you in a course of 18 webinars. It's a complete course. Once you go from the beginning till end, you become, well, I can guarantee you that you'll become a pre-intermediate, or most likely actually higher intermediate trader, depending on the input that you put. From time to time, I'll be giving you a homework. Therefore, I also would expect you to commit yourself and make sure that you don't waste my time nor your time. In general, these webinars are part of a complete course. As I'm saying, it's 18 webinars as a complete course, and it's generally a paid course. A complete course is paid. However, since we are associating A to Z Forex.com with Orbex Broker, all the costs are covered by Orbex Broker. Therefore, we appreciate the inputs from Orbex in their commitment for traders' education, and I do believe that you becoming a trader with Orbex would also get a great edge over the market players overall. My name is Yag Ibrahimov. I've been in Forex industry since 2005. Those of you who registered from the link, you have read a little information about myself. I've been trading and training people since 2005. In 2007, basically two and a half years later, when I started my Forex career, I discovered a way of logic-based trading patterns. When I combined all those and added a little, of course, investment on my trading, I managed to make a 7-digit profit in 2007. And since then, I've trained and traded pretty much every day in my life, and I've traveled more than 100 countries so far and trained in every country I have been to. We have also upcoming seminars coming up in the next 2 months, in some parts of Europe and also Southeast Asia. I'll be traveling to Malaysia and Philippines towards the end of July, and I'd be very glad to meet you there as well in person. Today we will be covering about leverage and currency types. It may sound simple. Yes, it is simple what we are going to be covering today, but it is again part of the complete course. However, before I go ahead and start talking about all these, I would like to deliver the risk disclaimer of Forex trading. All these profit making, money, etc. sounds amazing. However, we have to understand that Forex trading or trading foreign exchange on margin carries a high level of risk, where we'll be discussing today what is margin. And therefore, trading Forex may not be suitable for all investors. Before deciding to trade Forex or foreign exchange, you should carefully consider your investment objectives, level of experience, which you can gain the experience with us today and with all our other webinars. And you also must understand and consider your risk appetite. There is a possibility that you may sustain a loss of some or all of your investment, and therefore you should not invest the money that you may not or you cannot afford losing. You should be aware of all the risks associated in Forex trading and seek advice from an independent financial advisor, may you wish so. So what is really trading on margin? What is marginal trading? Okay, these are the things that we are going to be covering. I'm going to make sure that you are becoming ready for the Forex market. You're going to be becoming part of the Forex trading environment. But before that, I would like you to be as interactive as possible in the rest of the webinar. We will also cover some parts of live trading towards the end of the webinar. Meanwhile, may I use some parts of the terminology or things that you don't understand? Please do ask your question and I'll do my best to answer it one by one. Okay, Now let's start the webinar. What is marginal trading? Margin is basically the security deposit that you are giving to your broker. It's an amount of money deposited as an insurance against your loss of transactions in your account. Okay. It can also be used as the amount of money needed to open a position, to open a buy or sell order. An actual requirement for margin depends on the leverage and the traded tool. We are also going to be discussing about how to calculate your margin and how to calculate your required margin. The leverage, meanwhile, is kind of the credit given by your broker for you, enabling you to trade more than what you have. I mean, there are people who cannot afford to deposit 100,000 or 10,000. But the beauty of the Forex market, not like many other financial markets, is that you can just have $1,000 in your account and use 1 to 100 leverage and trade with an instrument as if you have $100,000 in your account, just because your broker allows you to trade 100 times of the equity that you have. Okay, it sounds great, but trading, as I said earlier, on leverage, trading on margin carries a high level of risk. So it as much as it gives you the opportunity to make 100 times more money, it also gives you the opportunity to lose 100 times more loss. Okay, but fortunately, many brokers out there have a negative account protection. Orbex, as an example, is one of them. They give you swap free, and they also guarantee you negative balance protection. Okay. Usable margin, meanwhile, is something that is available for you. Let's say you have traded, you have an open position. You check your MT4, your trading platform, to see if you have any free margin or usable margin where you can use for opening new positions. Okay, here I have an example. Let's say to trade one lot of euro dollar, you would basically need to have 100,000 euro dollar. For the fact that, let me also get my pen over here, one lot, basically my amazing handwriting, is equal to 100,000 units. Okay, sorry for the amazing handwriting. I'm proud of my artistic skills. So if it was some other financial markets, to be able to trade $100,000, you would actually need to have $100,000. Some stockbrokers allows you to trade with 1 to 5, 1 to 2 leverage. In Forex, many brokers have a leverage up to 100, 1 to 100, 1 to 200. And at Orbex, you also get an opportunity to trade with 1 to 500. Let's imagine you didn't go for 1 to 500. I myself do not recommend you to have 1 to 500 leverage, for the fact that it would urge you to open larger positions, and you would therefore carry high risk. I don't like carrying high risk. Even if I have 1 to 500 leverage, I generally would trade as if I have 1 to maximum 50 leverage. This is the level of the risk that my appetite is built for. We'll be covering that also. So imagine we want to trade with 100,000 euro. So, and we have 1 to 500, or let's say 1 to 200 leverage. What it would mean is that you can divide your 100,000 by 200, because you have chosen 1 to 200 leverage. That would mean that you only need to have 500 euros in your account in order to be able to carry out one lot of euro dollar position. Buy or sell, doesn't matter. Meanwhile, if you would have 1 to 500 leverage, you would only need to have 200 euros in your account, for the fact that you just would need to divide your 100,000 by 500, and therefore you would get the €200 margin requirement. Okay, all right. Now let's have an example for entry. Okay, some of these things will sound very, very simple, but bear with me. In approximately 8-9 minutes, we will be going for more interesting subjects for those of you who have already experienced. As I said, this is a complete course. It goes from very basic towards very, very advanced. We will cover multiple advanced sections in our in our following webinars. So entry example, let's say we have deposited $5,000 in our account. We are using a leverage to 1 to 300, and the current Euro USD rate, I know this is not real rate, but it's just an example, is 1.30 buy, 1.3001 is this 1.30 sell, 1.3001 is the buy level. And we want to carry out as one standard lot. As I said earlier, one standard lot for us would mean that it's 100 units. Okay, so to buy 0.5 lots even, okay, we would need to basically go for 50,000 unit over here, multiplied by the current price of the euro dollar, which is 1.3001, and it would mean that we would actually need to have $65,005 in our account, taking the fact into consideration that the current rate would be 1.30. This would be, of course, without the leverage. The beauty of the leverage is that instead of having $65,005 in our account, since we have only 1 to 300 leverage, we just can take the $65,005 and divide it by 300, and we would get the $216.68 margin requirement in order for us to open a 0.5 lot euro dollar. This is just a great opportunity for you that you can trade as if, let's say, in a funny way, you can trade as if you are a millionaire without having that millions in your account, or by basically getting yourself to that level without really taking the $65,000 investment out there. And from the currencies out there, you will be, when you go into your trading career, I'll give you also an example, a funny example when I started forex trading. Back in 2005, I was just 17 years old. Okay, you can calculate how old I am now. I was 17 years old, and the second I entered the forex market, I went and opened an account. At that time I was living in the States, in the US, and I received a signal from a signal provider that time. It was saying short greenback at 1 point, if I'm not mistaken, 30 something that time. I was like, what is greenback and what is short? Do I make it smaller, or how do I do? So it makes it as much important for you to know the terminology used in forex industry as the logic that you use. So in here I have covered some of the terminology in here. Like the greenback you would hear would refer to the US dollar, which has the code of USD. Meanwhile, euro, as you know, GPY refers to Japanese yen. Cable you use for, or sterling you use for British pound. It also has the code of GBP. The reason for the word cable is that it was the first time a cable transaction, transatlantic between the US and UK done. Since then, it was called cable. Aussie is referring to Australian dollar with the code of AUD. New Zealand dollar is coded as NZD with the nickname of Kiwi. Meanwhile, Canadian dollar, because of the single star on it, is called as the loonie. And we have also other currencies which I'm not really fond of it quite often. We have the SEK for the Swedish krona, Swiss franc CHF, Korean won, we have the KRW, Singapore dollar, SGD, Norwegian krone, NOK, Mexican peso, Russian ruble. Okay, these codes are the codes defined by the International Organization for Standardization, or in another way, it's the ISO code for the currencies. Okay, now I was talking about 1.30, 1 point something for currencies, and you would see these kind of codes all the time, and you would see different kind of currencies. In forex market, you would also have three types of codes, forex codes. These are divided into direct codes, indirect codes, and cross rates. Okay, the direct codes that we have basically means that the quoted currency, let me again get my highlighter. The quoted currency is basically on the right hand side, this part. If the right hand side currency is quoted as USD, this would be called as a direct quote. Okay. Meanwhile, if your USD is on your base currency, which is on the left hand side, it's called as the indirect. Okay. However, if there is no USD involved in your currency pair that you are trading, that would mean that your currency pair becomes as a cross rate. We have a number of examples for it, such as Euro GPY, Euro GBP, I don't know, Euro Canadian dollar GPY, etc. Okay. You may ask, why should I know that? First off, quite often when a news come out, the direct currencies, let me delete these. Direct quoted currency like Euro dollar and USD GPY are inversely correlated. Meaning, as an example yesterday, I'll show my live chart. When you get a big news or any movement in US dollar related action where USD depreciates, and when USD depreciates, obviously US dollar Japanese yen is going to go down, correct? So when that happens, automatically you can look for buy opportunity for euro dollar. As I said, they are inversely correlated. Okay. Meanwhile, or in another way, if you are looking for USD Swiss franc and you see that USD Swiss franc is depreciating, it's going down, you can look for euro dollar going up. Okay, this is quite often the case. And you can find the correlations between the currency pairs. There are more different correlations that we are going to be covering shortly. Okay. However, before that, there are more kind of currency pairs that you should understand. There are some currency pairs that are called major currency pairs. These are euro dollar, USD Japanese yen, GBP USD, USD Swiss franc, etc. If you would like to know what are the major currency pairs in your broker's MT4, basically what you do is that you open your MT4, you go on your market watch, which is this section that you can see here, right click on your market watch, okay, you will have symbols. Or in another way, what you can do is press the Control and U, Control U letter. This window will open. As an example, with Orbex, you have the FX1 in here. If you press the plus button, it will show you all the major currency pairs that you have. Australian dollar, Euro dollar, etc. And even more, although we are going to discuss more of these in our following webinar, you can select it, press properties. it will show you the spread. What is the spread? It will show you the digits of the currency pair that you have. It will show you the stop levels. It will show you the pending orders. It will show you the contract size. It will show you swap if you have swap, and much, much more. So it's very important for you to test, to check your symbols and see what are they. Okay. Then we have the commodity block dependence. These are not really selected as commodity block dependence on your MT4. You cannot see it. So I would like you to take a note on it. We have, among my most favorite commodity block dependence, I have the New Zealand dollar US dollar. The reason that I love the New Zealand dollar US dollar is very simple. New Zealand is an agriculture based country, okay? They are heavily dependent on their agriculture, especially in their milk production. When you see that there is any kind of disaster or any kind of sickness taking place in New Zealand, or anything that can affect in their kettles, like their cows, their sheep and so on, you would see the New Zealand dollar being affected heavily. Like last year, if I'm not mistaken, it was November. In New Zealand, we had this shortage of milk, or the problem with the milk. When that happened, New Zealand dollar depreciated massively against the US dollar. Meanwhile, we also have the Canadian dollar, which is heavily dependent on their oil exports to the US. They are #1 oil exporter to the US. Now, you can imagine when the oil dropped from 100 level to shortly to 45, 50 level, the USD Canadian dollar also had an effect on it. Canadian dollar lost a massive value against US dollar, and therefore you saw that USD Canadian dollar went crazily upwards. Let's have a look at it actually live on our MT4. We can look at it in a simple way. USD Canadian dollar, drag and drop it on our chart, and let's choose on weekly time. And this is the level that we are looking for. Last year, 2014, I'm referring to, oil prices started to lose it, to drop from 100 level to 40 levels, slow by slow. And you can see from there on, Canadian dollar started to lose value against US dollar. And this is the 1,400, 1,500 pips movement. From it is almost December until February. In 2 months, 1,400 pips. Now imagine if you would have been able to catch that opportunity, even if you are not an oil trader, but you feel that there is some kind of effect, some kind of side effect happening to oil, and you want to take an opportunity, and if you would have bought the USD Canadian dollar, you would have made close to, well, one lot entry, you would have made $15,000. That's the beauty of Forex. Okay. Meanwhile, we have Australian dollar, which is also heavily dependent on overall the exports, commodities export to China. Okay. And when you hear that there is some kind of downside in Chinese economy, like it's happening nowadays, that they do not need the raw material from Australia to be imported to China, you would see Australian dollar losing its value as well. Therefore, Australian dollar, US dollar, Aussie dollar, in another word, would go down. Okay, let me see if we have any question. Okay, so far one question, can I share my schedule with Southeast Asia? It is the last week of July and I'll be in Malaysia and Philippines. Let's go to the other one. Then we have, besides the other currency types we have a refugee currencies. I call them as a refugee currencies for the fact that I see it as, whenever something crazily happening, some people call it as a safe haven currencies as well. So imagine that the world is going into a very, very bad crisis. That time you would see the people dumping highly impacted currencies and aiming to go for safe haven currencies such as US dollar, Swiss franc, or Japanese yen. Quite often Japanese yen fails as a safe haven currencies, especially in the last 2 years. But previously Japanese yen used to be a major safe haven currency. Why do people do that? First of all, people believe that US economy and the Swiss economy is less likely to be affected by global disasters, financial or natural. So let's say if something major is happening, like an expectation of Greece leaving Eurozone, what would people do? Of course, people will sell their euro and euro-related equities, and they would go invest in Swiss franc. This is exactly what also happened back on the 15th of January. It was becoming extremely hard for the Swiss Central Bank (SNB) to maintain euro Swiss franc 1.20 level, because they were selling Swiss franc in order to maintain the level at 1.20 baseline. So what did they do? They eliminated it right away. What happened? Everyone dumped their euro and they went for buying Swiss franc. That's why we saw massive movement in Swiss franc. Let me also show that as well for you. Euro Swiss franc, you can see that it was for many years that the Swiss franc or the Swiss franc was based on 1.20 baseline, that the SMB declared that they would do everything they can in order to keep the Swiss franc against euro at 1.20 level, not below it. And on the 15th of January, when they decided that, okay, it's already too expensive, Greece is almost leaving Eurozone, and we have to sell every day millions of Swiss franc in order to keep the level against euro at 1.20, and it's happening on our taxpayers' money, we are not going to keep it anymore. What happened was, within just minutes, the Swiss franc moved by 2000 plus pips. What happened then? Many brokers such as FXCM, Alpari, and a number of others got heavily affected. And you can also see a number of them right now being troubled. Unfortunately, that's how it goes. Whether you are a trader or a broker, you need to have a sound risk management structure, and you need to secure yourself from potential losses, correct? So many of these brokers right now are going after traders and claiming their negative balances. People were always putting a pending buy orders at 1.20, expecting that the euro Swiss franc will go upwards. I've done it myself. I used to have positive swap even on euro Swiss franc, and I wouldn't care where the market would go, and I would just buy it and leave it for days and days. I'm not doing it anymore, and I do not recommend you to do it. Imagine if you would have bought and holded euro Swiss franc with a positive swap rate that time for 360 days with even $1 per day without doing anything. You just would be getting $1 a day on your investment, and each time it would go upwards, you would also make money. This was the beauty of euro Swiss franc. But as you know, there is no free money out there, correct? So it didn't happen. And now many of those brokers are going after their clients, their traders, asking their money back. Because when you have that 2000 pips movement and your stop loss doesn't work because liquidity is not there, etc., what you have to do is basically you somehow need to cover up your equity. FXCM, as an example, lost $100+ million. Alpari UK was pushed out of market, etc. Okay, so trade with a broker, therefore, where you have negative balance protection, because you never know what if you would have 300 400 pips gap in the market, which is possible, even on euro dollar nowadays. If something happens to Greece and they decide to leave eurozone over a weekend, you probably would have another 500-600 pips gap in the market. So coming back to our presentation, refugee currencies are the ones where people leave one risky currency and prefer to have their investment saved in. They also do the carry trading for the fact that they would feel like the economic risk is rising, and risk aversion is also rising as well. Okay. Now let's look at the market overall. Okay, this is I've shown it to you before in our last webinar as well. Trading Forex, I believe, is pretty simple. I quite often do not use indicators, not like many other so-called gurus that you would have out there. My major indicators that you would have would be 200 SMA and 50 SMA, for the fact that I believe market is moving on logic-based formula. It has been proven before me. I haven't invented the holy grail, neither have the intention to do so. But I'm using the simple things that are available for me, just like everyone else out there. Fibonacci, you can use something similar to be able to catch. You would see that 38.2% would be working out for you, or 61.8% would be working out for you, etc. We will be covering up, if I'm not mistaken, in our 8th session, my secret Fibonacci formula, where spending just 10 minutes a day, you can calculate and project your upcoming 10 days trading, just spending 10 minutes a day. And crazy thing about this preciseness, or following the market and following the trend, is that you just follow it, and you get, when I trade right now, I have close to 80% accuracy in my orders, in my trading. So okay, I also use trailing stop, meaning that I'm not like other people who would say that, okay, I'm right all the time. So if I see that something is gonna happen, I would exit my position, cutting my profit in half or cutting my loss in half. It doesn't matter. The main aim for me, more important than making money in the market, is to make sure that I'm not losing money in the market. Okay. What I have something here is that I've also shared you as a handout on your GoToWebinar. You can download it for yourself. Excuse me. It's called Trader's Hill. I believe everyone in Forex starts a little lucky. I was lucky myself when I started first time. The first time I started with $100 in 2005. I don't know how, I still cannot believe how I made it, but I made that $100 to 600, close to $600. It was 580 something dollar. I've shared this story with many of you over and over. $580 in less than 2 weeks. I withdrew that first $100 and lost the amount of $480+ in less than 1 hour. Why? It was because I was lucky. Probably because I didn't even know what was a candlestick. I just saw that market was going up, I was buying. I saw that it was going down, I was selling. I wasn't even using a candlestick, which makes me, laugh right now. So every trader in 2010, mathematician shared this chart. It was published in a journal. It was related to stock traders, but stock traders are also very similar to forex traders. Yeah. So what mathematician did was saying that every trader starts a little lucky, but also a little close to chaos, because he does not have everything in order to become profitable. So what does this trader do? He basically needs to pass certain stage, and this certain stage involves going through a hill. Okay, going through a hill. He needs to discipline himself in a way that he will not go chaotically, but he will go in a professional way. He will plan his day, he will plan his trade and trade his plan and trade his day. Okay, this is the epiphany level. When you get to the top of the hill, this is also what happens to pretty much to everyone. You get to have this feeling that there is some kind of holy grail out there that you're going to invest. You're going to try everything because you found something that's working for you. You believe that, you can invest 100% accurate system. I'm sorry to disappoint you, but there is no 100% accurate system. Even in my 10 years of career, where I've spent pretty much every single day of my life in Forex and Forex related activities, I still am not able to surpass 82% accuracy. And 82% right now is my maximum that I've done. When I'm telling about 82% accuracy, many professional traders out there are still envying that how am I able to make 82%. So what many people do is that when they get to, let's say, 52%, 50+% accuracy in their analysis, they get to have that feeling that there is a holy grail somewhere. If I can do 50%, I can do 100%. This is where they fail, and they stumble back towards the chaos because they don't follow their trade, they don't follow their initial plan. They start jumping from one strategy to another instead of investing more time on that discipline, investing more time in that strategy and learning more. So follow your trade system and use proper money management. Okay, we will be covering a system for you in our complete course, which I want you to follow to its full accuracy. And I'll also share a story. In 2010, I had a student from Malaysia. He participated in my course. He started to trade, and the aim for him was to make 3 to 5% per week, which is an amazing return. And it would mean that he would make 12 to 20% per month. He deposited $5,000 with his selected broker. He started to make, on average, the first 2 months, his average was $800, $890, which is close to 20%. And after 2 months, he decided to tell himself that, okay, if I can make 20%, I can make 100% return in a month. Because some people on social media are writing that they are making 500%. Okay, you can make 500%. You can even make 1,000,000% return. I have seen people turning their $1,000 into $1 million. I myself turned $25,000 into 100. Well, I don't want to give the exact number, but it was over $1 million. So it is possible to make it, but when you are aiming for a larger return, you obviously are taking a larger risk as well. Okay, so this person decided to ditch the strategy that I have given him. He sold even his house, put more than $60,000 into the forex trading, and it took him less than 3 weeks to come back to me saying that he has lost all his equity. How I can help him to get his money from his broker? Well, of course, if you lost the money, the money is gone. No one is going to come and return your money. So I highly urge you, if you are going to participate in this complete course, I highly urge you to make sure that you follow everything you are going to be learning, and you need to follow it to its best extent. You're going to learn risk management, you're going to learn money management, you're going to learn 3 strategies. One will be intraday, one will be for short-term swing, couple of days, and one would be for a long-term swing entry up to a month or 2. Okay, so you would be learning something that you would not be getting outside, and you're lucky that I will not be charging you $2,500 that I'm charging otherwise for other people. So use this opportunity, get the best out of it. All you need to do is you need to have, I think, $1,000 deposit at Orbex, and you would get the complete course free of charge. You can even withdraw your $1,000 if you're not happy with the course that you're going to be getting from me. That's overall it. If you have now questions, please feel free to type it for me, and I will be more than happy to answer it. Okay, Ching has already a question. If I have only $100 in my account, does that mean that the maximum that I will lose in the market is $100 according to the Orbex negative balance protection? Yes, Ching, if you have $100 in your account, because Orbex is offering you negative balance protection, you can only lose $100. Even if something bad happens to you, you wouldn't lose more than $100. Okay, please share your questions, because we have so many people here. I know some of you are quite new, but if you are not asking, even if it is not related to today's webinar, I would like you to share your questions so that we can answer it. Jahangir is telling that he has seen 1 to 1000 leverage. Of course, there are so many brokers out there, mostly unregulated brokers who doesn't offer any trust to their traders, that they even offer 1 to 2000 leverage. I have seen, and I still do see, people getting or being called to deposit $20 and being offered 1 to 2000 leverage. Imagine you have 1 to 2000 leverage. What will happen is that the second you open full leverage, because you don't know about market, you lose all your equity. So I do not recommend you to go for more than 1 to 200 leverage unless you really wish so. We have so many people but so less questions. We have many Dutch people, Nigerian people, Philippines, Malaysia, Azerbaijan, Lithuania. Come on, guys, share your questions, please. Melissa is asking, commenting that she's a US citizen. And how can you get my lessons? There are basically right now 2 ways, Melissa. One is to pay the full fee, or the second one is to have an account with Orbex. As a US citizen, you cannot have an account at Orbex, unfortunately. So if you can contact me personally, we can offer you something that would make you happy. Alex is asking, do you consider Orbex as a good broker that you can rely on? Alex, Those of you who knows me, I'm not a kind of a person who generally combine my name with any other broker. But based on the tests that we have done with Orbex, that's indeed the reason why we have agreed to do this complete course free of charge, is the fact that Orbex was the only broker which passed the test among the 30 brokers that we tested. We were approached by 30 brokers. All of them failed the conflict of interest test. Orbex, the way they have managed their risk management, and you can believe that if I'm hosting and holding my own accounts at this broker right now, it means that I have tested them, and I have a 6-digit account with Orbex right now. It is a reliable broker. I don't tell you to take my word. What I would tell you is that go ahead and test the broker yourself. You can easily test it in a few ways. One of them would be you deposit something, you make a few entries, and you withdraw. The thing that I love about this broker is that they offer me same-day withdrawal. Not like other brokers. I'm not going to mention the name of the broker, but I have some of my students following some brokers whose withdrawals are pending from the 4th of April. For your information, it is the 18th of June right now. It's been almost 70 days, 75 days that their withdrawals are pending. At Orbex, all the withdrawals are taking place within the same day. Mike, how many percent do you aim in one monthly with your strategies? Mike, in general, I already shared this information with you. As a professional trader, if I can make more than 10%, I'm extremely happy because of the fact that my accounts are very, very big. Meanwhile, on the other hand, for many of you, I believe you are not going to be trading with 50,000 or 100,000 or 200,000. If you are trading with less than 10,000, you can easily aim for 20% per month. It would mean that you are going to be carrying a little extra risk, but nonetheless, you wouldn't be aiming for major risk in your entries. I would be giving you an Excel file where you would have your trading plan, where you would follow everything that you would be going for, and therefore you can have more understandable risk appetite. Okay, I cannot spell this person's name. I believe this friend of ours is from Nigeria. Where can we download the Trader Seal? On your GoToWebinar, there is a handout. If you can please press the handout. Basically, this is the handout that you should be receiving. I'm going to also send you the link just in case if you cannot. Okay, send to all. You can get the handout from this link. Can you have an account with Orbex in UK without us, is asking. Yes, you can have an account if you are from Europe or anywhere else except the US, you can open an account. And of course, there are some globally blocked countries such as North Korea and so on. Unless you are from those countries, you can open an account. Can you comment on this? In order to become expert pro trading, it's required 6,000 hours of repeat, try, error. What's your opinion on this? Well, I think you need to invest more than $6,000, or you need to have a proper mentor. In our case, you would become a little lucky for the fact that your 6,000 hours of repeating and trying would have been already done by your mentor, myself, Yagub Rahimov. If you follow it properly, you would be basically having a checklist: 1 done, 2 done, 3 done, and follow it. You don't need these 6,000 hours, but maybe 500 hours. Nevertheless, you would still need to practice it. Jahangir is asking, most of my things are fundamentals. Jahangir, on social media, I share fundamentals, the market leading fundamentals. However, the webinars are not fundamental, mostly it's technical. I'm not a fundamental analyst myself. However, I trade on major news quite often, and I also follow specific I also offer a specific strategy where things are a little backed up fundamentals. Basically, if the fundamental right now, like as an example, for yesterday's FOMC meeting is telling me not to buy euro, sorry, not to buy a dollar, I'm not going to go against the fundamentals. We follow the fundamentals. However, our strategy is a technical strategy. And I can even tell you it's mostly based on Fibonacci and moving averages and price action. Alex is asking about market maker. You can choose market maker or STP, Alex. It's up to you. And Abe is asking how many sessions in total. We have in total 17 sessions, plus we will afterwards, whomever completes the full 17 session, they will be getting 5 hours per person of extra consulting, meaning you would be having a one-on-one discussion with me as well. And this webinar is not, next week is going to be the last one, which is open for public, and afterwards only for the selected people, meaning whomever has deposited with Orbex broker more than $1,000 will have the opportunity to join the complete course, and we will have more than one webinar per week. Or in another way you can do is that you can pay me $2,500, have no account with Orbex. So it's up to you to choose whichever one you want. This is so far the end of the webinar. Although we have started to ask a number of questions, I very much enjoyed having this direct communication and interaction with you. Thank you very much for being with me. Just one last thing that I want to share with you. If you want to follow the market carefully without having bias, from fundamental point of view, I often follow what the big banks are commenting on. And my major favorite site is called AZ Forex. So you can also go there and you can get their overall market approach to see what big banks are commenting. As an example, today I shared some information on my social media as well, that Bank of America Merrill Lynch is saying that their preferences have shifted from bearish to bullish on euro dollar, and they are giving 3 reasons behind them. So test yourself on AZ Forex and follow the big banks to see what the big banks are after, because at the end big banks are the market makers, we are just followers. Okay, this is the thing. Jacob Maas, who's doing this commentary, is a very close friend of mine from the Netherlands. He's an analyst with one of the major banks in the Netherlands. So use this opportunity, participate in this complete course, and stop wasting your time, in short, because Forex is a full opportunity market, and if you are not using it to its best extent, to its full extent, you are just wasting it. Thank you very much, everyone, for being with us today. Once again, it was me, Yagub Rahimov, today with you. And these are my contact details. You can contact me on Skype if you wish so. Add me, and let's move you from starting trader to an experienced trader. This is my intention and this is my motto. Thank you very much. Stay blessed. Take care for now. Bye bye.